The CPI data is out, and while the headlines scream, inflation uptick, the real story is much more powerful. The crypto market just dodged a bullet, held critical levels, and quietly lined up the perfect setup for Bitcoin and altcoins to take off. Forget the noise, this wasn't a cancellation of Altseason. If anything, it was confirmation that the runway is clear for the next big rally. And if you're looking for which altcoins are primed to lead, two names stand above the rest: Chainlink, Link, and Say. Structure flipped, momentum intact. Bitcoin is the heartbeat of the crypto market, and right now it's thumping louder than ever. After days of back and forth chop, BTC closed a daily candle above the critical $113,000–$114,000 range. That's not just a minor victory, that's the moment resistance became support, and it signals a structural change. The market is now making higher highs and higher lows. In technical analysis, that's the textbook definition of a bullish trend. Combine this with the CPI print landing exactly on expectations at 2.9%, no upside shock, no downside disappointment, and you've got the perfect recipe for continuation. Yes, the number was slightly higher than last month's 2.7%, but that's already baked into the forecast. What matters is that the market avoided the worst-case scenario of a higher-than-expected print. That means no panic sell-off, no macro meltdown, just a short-term pullback opportunity. My expectation? A dip toward the $112,000 zone during New York trading hours, which smart money will treat as an entry point, not an exit. This is how big legs up begin, stealth pullbacks that fuel the next impulse. Liquidity is knocking. The bigger picture is even more exciting. Markets aren't just looking at CPI, they're forward-looking. Prediction markets now see 3 Fed cuts in 2025, around 75 basis points, as the most likely outcome, overtaking the long-favored 2 cuts. That's critical because rate cuts equal more liquidity, and liquidity is the lifeblood of crypto rallies. Meanwhile, accumulator addresses, wallets that only buy and never sell, are at all-time highs, showing that deep-pocketed investors are hoarding Bitcoin like never before. Institutions are warming up too. BlackRock's CIO just went on record saying Bitcoin deserves a spot in the ideal 2025 portfolio. When Wall Street voices shift from skepticism to allocation, you know the tide is turning. The Oracle powerhouse ready to run. If there's one altcoin that looks perfectly positioned for this environment, it's Chainlink, Link. Chainlink isn't just another alt, it's the infrastructure layer powering real-world adoption. Over the past weeks, we've seen massive developments: U.S. government agencies experimenting with bringing data on-chain through Chainlink. Partnerships with giants like UBS and regulated RWA exchanges in Hong Kong. The launch of payment abstraction in the Chainlink Reserve, which means both on-chain and off-chain revenues are now being converted directly into Link tokens. That's not hype. That's a direct pipeline of demand feeding into the Link economy. On the charts, Link has already wicked above recent highs, grabbing liquidity, and now looks set to retest support around $22 to $22.50. That's exactly the kind of shakeout and retest setup that seasoned traders love. From there, the next logical target is $27 plus, with momentum potentially carrying it even higher if institutional adoption headlines keep rolling in. Simply put, Chainlink has both the fundamentals and the technicals aligned for a breakout. Say, the sleeper chain going parabolic. The second coin to watch is Say, a project many are calling the next Solana, but in truth, it's carving its own lane. Say is emerging as a base layer for financial applications, and the numbers are jaw-dropping. Daily active addresses now top 787,000 plus, outpacing Ethereum's 537,000. TVL exploded from almost nothing to $600 million in 2025, a 30x increase in under a year. Spot trading volumes hit a record $2.2 billion in Q2, showing real usage, not just speculation. The SEI ecosystem is also heating up with new DeFi launches, gaming integrations, and RWA, real-world asset products. Big catalysts like TGE launches, Yay Finance, Folks Finance, and September's rate cuts could send activity parabolic. Technically, SEI has broken out of its descending channel, and while it would be ideal to reload near 29 cents to 30 cents, the upside target is clear: 54 cents to 55 cents. That's a potential 95% rally if momentum sticks. With this level of adoption and velocity, SEI isn't just hype, it's data-backed growth. Altseason outlook: more than just hype. CPI didn't cancel Altseason, it pressed pause for a breath before the sprint. The underlying trends, enterprise adoption, liquidity expansion, regulatory clarity, and institutional warming, are all bullish. Projects like Clearpool are proving DeFi can deliver real, risk-adjusted yields to everyday users. Blockchains like Concordium are solving the compliance puzzle for stablecoins, bridging the gap between crypto and real-world payments. These aren't just narratives, they're the groundwork for the next phase of crypto's mainstream integration. The crypto market just did something important. It absorbed CPI without losing structure, and it's holding strong into a week full of potential catalysts. Bitcoin is carving out bullish momentum above $113,000, and any dip toward $112,000 looks like a gift. Chainlink is coiling for its next breakout on the back of enterprise adoption and protocol-level demand, while SEI is exploding in usage and chart structure, offering a near-term doubling opportunity. So here's the bottom line: CPI didn't end Altseason, it might have just confirmed the launchpad. The dips are for buying, the structure is bullish, and the leaders are clear. Stay focused, stay prepared, and don't sleep on Link and SEI. The next few weeks could rewrite the playbook for the rest of this cycle.